Good evening, folks. How y'all are on this Saturday night? Tonight, we're going to be talking taxes, stock market, a little bit of this, a little bit of that. Politics, of course. Politics always gets involved in everything. And we have Mario Reina. He is a candidate for District 3, I believe. District 3, McAllen Commissioner, correct?
Correct. Thank you for having me on your program. Appreciate it.
I understand that you dabble. What would you call it? Dabble, or would you just go ahead and call it investment or professional in the stock market?
Well, I think I go back to the late 70s when I first bought my first shares of GTE. GTE no longer exists. GTE became Verizon, and then we know what happened to Verizon. It's a huge company. So yes, I've been involved with the stock market since the late 70s. And throughout the years, most of my education involved finance, banking, and what have you, accounting. And needless to say, I like the process. One of the things that I learned being at South Texas College is that almost every semester class, and I would ask the students, what is the stock market? And a lot of them do not have an idea what this is all about, and I don't blame them, because only 55% of the American people are involved in the stock market. And my job has always been to make sure that more people know about the stock market, because you can do a lot better by being in the stock market than having your money in the bank. Why? And the reason is, if you put your money in the savings account, I don't know, what is it, 1%? I don't know if you get 2% if you put money in CD.
You're lucky if you get 1%.
Yeah. So in the investment world, they have this rule of 72. It's called the rule of 72. So, for example, if you have your money earning 1%, so 72 divided by 1 is what? 72. It's going to take you 72 years to double your money. And 72 years is obviously a long time. So if you invest in the stock market and you go on a very conservative side of the stock market, let's assume that you get 8%. Okay, so 72 divided by 8, in 9 years, you will double your money. So if you put $100, in 9 years, you have $200. So if you have 10,000, in 9 years, you have 20,000. If you have 100,000 in 9 years, you have 200,000. So, but at the same time, let's assume that you understand this stuff a little bit better, and you invest, and your return is 15%. So 72 divided by 15, you're looking at maybe a little bit over 4 years, 5 years to double your money. So if you understand the stock market and you are careful with it, you need to talk to a financial advisor. Okay, I don't need one, but people need to talk to one and to get a better perspective. So there's all kinds of vehicles out there to invest in. I personally, I don't buy individual stocks. With my major investments, I use mutual funds. And what is a mutual fund? A mutual fund is when thousands of people get together, they put the money into this mutual fund. You have an expert financial manager that takes care of your money, and then they invest it in specific areas. If you're interested in technology, you have a mutual fund for technology. If you're interested in natural resources, whatever you're interested in, there's a mutual fund for that. So you determine what kind of risk you want, and you go that way. Now, as a hobby, I have what is called Robinhood. And Robinhood is an application that allows you to buy shares every day if you want. You can buy and sell every day if you want. I do that. And I don't want to be insensitive about this, But in the small amount of money that I have in Robinhood, you know, I make over $200 a day. And what is $200 a day? $200 a day is about $50,000 a year. And I do this stuff before 9:30. I don't want to be insensitive, because I know, how hard people work, and I say, how can this crazy guy, make make that kind of money playing in Robinhood? And my goal in Robinhood is very simple. I have a criteria that I follow, and so there's options in Robinhood. They give you buy, hold, and sell. So for me, if the stock has buy and hold at 80%, I buy. If the stock has a dividend, I buy. And then my goal is to make 1% on that trade. If it goes 1%, I will sell it. What is 1% a day? Well, 1% a day in a year, if you have 255 working days in a year, that's 255% in a year. How much did you get in the bank for the year? You got 1%. So I'm looking for 1% in a day. And a lot of times, I hit a home run and I'll get, 5 or 6%. And that's an ungodly amount of percentage points. Okay. But you have to understand the stocks that you want to buy. So you probably have been hearing about game stocks and all that. That is a crazy situation that I don't recommend on anybody. Those are options and people doing crazy things. I concentrate strictly on buying stocks of companies that you and I know. Caterpillar, John Deere, General Motors, Ford, General Electric, Procter & Gamble, Kraft, those kind of companies. We know those companies. And so that's what I do. And for whatever reason, those companies the stock goes up and down during the day. There's no reason for this. The only reason that I can think of is that someone needs money right now, and they're willing to take a hit on the price of the stock, and they sell. And when they do that, I'm there to buy when they're low. When they want to sell low, I buy when they're low, and I sell when it goes up. So that's what I do. That's a little hobby that I have. And it goes well. It goes well for me.
There is a saying called "you always buy on the dip," but of course you got to know your stock, like you say. Let me just, tell the folks out there that are watching that this presentation is for entertainment and informational and educational purposes. We're not here to buy, sell, or trade any stock, any particular stock, and we're not actually financial advisors. So you really need to do your homework. So don't take our advice seriously enough to go out and buy something. Always do your homework.
Absolutely. I always tell people that you need to talk to a financial advisor. It's not as easy as just getting a Robinhood. I have the application. So what? So now you have the. So what now? What do you do with it? So you need to completely understand how the market works. And so if anyone is listening out there, I encourage you to understand how it works. But I will say this, that you need to consider, look into this idea that I'm talking about, the rule of 72. You can go Google it, and it'll tell you. And it's going to tell you exactly what I said. That it's a mechanism to determine how quickly you can double your money. So imagine the people that have considerable amount of money, and they invest, and they can get, a 30 or percentage returns. They can double their money in 1-2 years. I mean, and when you look at the way the market has been behaving the last 3 days, it is bizarre. And I don't go into those particular situations because I'm not into that kind of speculation. I consider myself a very conservative individual. So, but even being conservative, you can do well.
Absolutely. Hi, Mara. How you doing? You want to learn how to invest? That's a good Oh, you know what? That brings up a good question. Or actually, let me preface by saying there's speculators, there's traders, and then there's investors. Now, my understanding of a speculator is somebody that actually gambles on a daily basis, on an hourly basis.
Mm-hmm.
And a trader is not necessarily a day trader. They're basically short term, quick gain type people, but they're not really investors. Investors buy and hold for value,
Mm-hmm.
for
Mm-hmm.
dividends, and for increase in price. Did I leave anything out? Did I leave anybody out?
No, absolutely. I'm referred to as a pattern trader because I follow a pattern. I look at the company and they break it down into a daily, weekly, 3 months, 1 year, and 5 years. So I look at how it's a behavior. It has a behavior. It's not necessarily going to be behaving the same way all the time, but you get a sense of how it's doing. You look at the peaks and the valleys, and you have, it does every 10 days or every 15 days, this is going to happen. So you study. I mean, it sounds easy, but you really need to understand it a little bit because I do it very quickly and but I'm a pattern trader and so what happens is that if a stock goes down because I told you the criteria that I have, I'm not going to sell it. That stock will eventually come up. It might be a week, it might be 2 weeks. It doesn't matter. It's going to come up. The only way you lose in this thing is if you sell. Don't sell. If the stock goes down, don't sell because more than likely it will come up. If you bought the stocks that I'm talking about, I'm talking about stocks that are in the Dow Jones, Caterpillar, General Motors, Ford, those kind of stocks, they will come up eventually. But if you follow the pattern and everything is okay. The last 2 days, I'll give you an example. In the last 2 days, the market went up 3%, and then it went down the next minute 2%, and that's crazy. I mean, you have for in the things that I have, it went up 3% and it went down 2%. So the values of the stock that I have are all over the place. But during that time, then it went up 3%. I made a killing, and then it went down, so I just leave it alone. It will come up eventually. So Myra was asking you want to learn how to invest. One of the best ways to learn about the market is to start reading the Wall Street Journal, for example. Read Fortune magazine, read Bloomberg to understand those kind of things. They have a lot of advice. You need to understand what a stock is. You need to understand what bonds are. And if you can understand that, then you should be doing well.
Becky says that I enjoy investing. I'm actually kind of addicted. Yeah, it can be fun. I actually do it because it's fun. I downloaded the Robinhood app, and I'm constantly in there. I make quick money in there. I don't have patience for long term. Well, the only problem with that, Becky, is taxes. Unless you have it in an IRA account, actually that you're managing your investments in an IRA account, you got to kind of watch for taxes as well because that's short term gain. And you mentioned something about profit and loss. There's a word that's used all the time. It's called unrealized. You don't have a loss and you don't have a gain until you sell. So you have unrealized profits or unrealized losses until you sell.
Yeah, absolutely. So, Becky, if you're involved in Robinhood, and you can expect to be taxed at the capital gains. So and that's a lot more than ordinary tax. So let's assume that you made I don't know $10,000. Your tax, you can set aside over $2,000 just for that particular gain. I'm sure Cruz can tell you about short-term gains and long-term gains, but you have to be prepared to pay the tax.
Yeah, absolutely. Again, if you're doing it within a IRA, then you're not going to be taxed until you actually get distribution from that account, which is okay. I mean, that's actually what I do. I actually have all my major stocks, anything that I don't want to hold for a long time, I have in my IRA. Anything that I want to just buy and hold, I can use Webull, I can use Robinhood, or any of those other uh, programs. You had mentioned something about your teaching a class about that, and I have a question about that. They don't teach home economics anymore in high school, and that's really a shame that kids, and I call them kids, anybody that's 18 and under, I suppose, they're not getting the necessary education to be actually able to budget their finances, or when they get married, budget their household. That's bad. How do you feel about that? And do you
Well, yeah,
that?
in the days of my father, my dear father, he would borrow money. For example, let's say he would borrow $1,000, and then 1 year later he would pay the $1,000. So, back then people did not appreciate the concept of inflation. $1,000 today is now $1,000 a year from now. And so we need to have a very deep appreciation of finances. When people go and get a credit card, for example, and they're being charged 18% or 20%, what does that mean? Man, it means that you're paying, 20 cents for every dollar, and that's a lot of money.
It is a lot.
That is a lot of money, and if you don't have an appreciation of interest, then you're going to be suffering a lot of financial loss. So what I did in my particular class, I dedicated a few hours, and I would bring a financial advisor to talk about, what is a bond, what is a stock, and go through the process of what is a corporation, and those kind of things. So I think maybe for us it's very simple, but for some people this is fresh information, and I want everybody to understand. So you look at the news every day and say, wow, the stock market is doing fantastic. Well, yeah, it's doing fantastic for 55% of the American people. What about the other 45? It's doing great for me, but what about the rest of the population? So we need to, and I'm glad you have this program, because I'm sure that people will pay attention and get motivated and start learning about the stock market. I am a believer in the stock market, and but again, you need to talk to someone, a financial advisor.
Becky says big class action lawsuit against Robinhood, so I'm thinking about going to transfer. There is a lot of buzz out there about, you have seen the suicide of Robinhood in live, that Vladimir fell on the sword for the hedge funds in order to save the hedge funds, those that he could. And supposedly there's even rumors from an insider, supposed insider, that there was even a call from the White House. So I don't know whether there's going to be an adequate investigation. I don't know whether it's going to be all rhetoric and showboating and really and nothing's going to happen. But I wouldn't blame you, Becky, to actually getting out of there.
Yeah, so there. Yeah, in the last few days, for example, I would open my Robinhood, and there would be a notice, and they would say, "We're going to limit the trading in specific stocks." And I'm thinking, well, why would you do that? So that's where it's coming from, that they were trying to limit because they had so much activity, so much volatility in those specific stocks that they wanted to protect the people that do not understand. In my guess is they want to protect people that don't understand the option trading that's going on. because you can buy options in Robinhood. And so that's my guess. But at the same time, you have to remember that, Robinhood just picked up $1 billion in new equity the other day. So this thing is going to continue to expand. They will continue to educate people, just like the name says, Robinhood. Take from the rich, give to the poor. So they're trying to educate people on what gains you can get from the stock market. So if I go back to my little example, how I bought the stock at the beginning, I had to go to a stockbroker. I had to make an appointment, go visit them, talk to this person. Or this person would call someone on the floor at the New York Stock Exchange to buy my measly amount of stocks that I wanted to buy the first time. Now, Becky, you and I just get the phone and do this on the spot. It takes seconds.
Yes, I'm aware of taxes. Okay, good. You can prepare for it. And who are the hedge fund managers? Hey, Bert, that's a good point. I don't know if you're aware or not. One of the head honchos of Citadel is Psaki's sister, or brother, I'm sorry. Jeffrey Psaki, or Saki, I'm not sure how you pronounce it, is the brother of the White House press secretary. So there's a revolving door with Washington, with DC, I should say, and hedge funds. I'm going to have to disagree with you that they were really trying to protect the little guy. In my opinion, they were trying to protect the hedge funds. They allowed the hedge funds to continue to trade while stopping the ability for the little guy to buy. To fill their sales.
Yeah, I read those stories also, and I mean those guys, those hedge, that's what it means. They're hedging on something, and so they're buying short and what have you. So yeah, so I understand. There's that story going around. So so those are things that are a little bit beyond, and someone is going to investigate that situation, and hopefully we'll get some answers soon.
I certainly hope so. I really hope it doesn't get swept under the rug on that. Bert says GameStop is beating hedge funds to a pulp. Well, GameStop, it's those that are trading in GameStop.
Yeah, so I'm going to give you an idea about GameStop, just so you understand, the how crazy this is. So GameStop, for example, right now is trading at $302 right now. Okay. About a year ago, back in February 2020, it was trading at $3.94. GameStop, okay, remember the rule of 72? GameStop has increased by 7,879%. So imagine how someone has doubled the money when you go that high. And this is absolutely insane. This happened in January. Okay, this just a few weeks ago. It was trading at 39.91, trading at 312. How does this make sense? So you have to be very careful. Obviously, when you're buying, I personally would never buy this stock because it doesn't fit my profile of buying stock. So you have to be very careful when you buy it. You get involved with this kind of stock. This thing has no ratings. It has no, well, I take it back. It does have. It has 11% buy, 56 hold, 33% sell. So it doesn't fit my particular criteria. So if I would have bought it in January, I probably would be in London right now having a great time. Imagine that it went up that much in a few weeks. Imagine that if I had, let's say, 1,000 shares, at 31,000. Now it's 300,000. it would be $312,000 from 30,000. It went to 300,000 if I had 1,000 shares. So hey, silly me, I should have bought that, right? But no, that's not the way I do it, because at the same time, as quickly as it goes up, it can very quickly go down. So
absolutely, that's pretty much on point, because anything that goes up that fast with no fundamentals is going to come down just as fast. And there's two other points that I wanted to mention. All of a sudden, I forget. I forgot what the other 2 points that you were what you had mentioned. Let me just go ahead and read what Myra says here. I believe the same. They were not protecting the the investors. Correct. Red Citadel donated $800 million to Janet Yellen. Actually, it wasn't a donation. Well, you can probably call it that. They hired her for speaking engagements, and they paid her that much. So she
800 million?
No, 800,000. I understand.
Okay, because it says
million. This says million, but it's 800,000.
Yeah, it's a little bit hefty.
AMC is supposed to be next, but at least AMC has properties, actual assets, as opposed to GameStop. I mean,
yeah, AMC it was very active also, and I think this is the American cinema, right? So American entertainment. So they're doing well. I mean, let's go back in December of this year. It was trading at $2.39. It's now $13.45. It's gone up 97% within the last 12 months. So, 97%. I mean, obviously, if I wanted to be risky, I would have gone with this company. But I'm not that kind of guy. I don't. I'm a conservative person. But if I was a little bit risky, the rule of 72, I would have doubled my money plus, because it's 97%. So I would have 72 plus. I would have doubled my money in a matter of 2 weeks. But that's not what I do.
I kind of follow the same philosophy. And for Myra, the decisions that you make should be a business decision, not an emotional decision. Mario gets out at 1%. I get out at 10%. And I've got friends that tell me, man, why did you do that? Tesla went up, to the moon. And I said, no, I made a business decision. I didn't see any upside, and I saw more downside than upside. So I made a business decision to get out. I made my profit, and it continued to go up. And I said, okay, I'll buy some more at the dip. It never dipped to where I thought I was comfortable at buying. So keep the decisions as business-like as you can, not emotional.
Exactly. I think there's a question about cities and counties. Do they invest in stocks? They're not supposed to. They're not supposed to buy stock. They're supposed to buy bonds, very conservative bonds. So I don't know any city or any county or any college that will buy stocks. Bonds, very conservative bonds, yes.
Correct. Bert, I don't know whether you're alluding to the fact that some of the talking heads are saying, well, the hedge funds are doing what they're doing because they've got pension funds that they got to worry about funding. My understanding, again, what Mario said, cities and counties and states should not be in those they should not be managed by hedge funds, basically.
Basically, yeah.
So I think it's that they're not being truthful, and it's a talking point when they say, "Oh, the poor firemen or the poor policemen, they're getting killed because of these millennials." I don't believe there's any truth to that.
Well, there's in that point, Cruz. Some pension funds perhaps they might be a little bit riskier because they're not connected.
Private.
Yeah, they're not connected to the city or county, but some pension funds might be a little bit risky, but not to the point where they're reckless. So maybe that's what maybe that's what the question was about.
Well, GameStop is a store and they're national, Irene says, yet they're mostly renting space. They have leases on their properties. I don't know how much real estate they actually own, but most of those storefronts are not corporate owned.
Yeah, yeah, it's a very interesting, and obviously I wish all the stocks well. There's probably a dozen of them that are doing. There's a lot of volatility, so I wish everybody well.
Well, again, there's another saying: volatility is vitality.
Yeah, I wish everyone.
If you got a stock that's going sideways, it's not doing anything for you.
No, I look for up and down, but not that kind of activity.
Yeah. That's a little bit exaggerated for sure. Great information. Thanks for the shared knowledge. You bet, Charlie. Oh, I am risky. Okay, that's fine, Irene. If you got set aside some funds for playing around, like for example, when I go to Vegas or any casino, my limit is $200 a day. Basically, if I'm going to play cards, if I'm going to play the machines, slots, I have my fun. If I lose the 200, that's it. I'm done as far as. So yeah, if you got something that you set aside that you want to play around with and not worry about risking it, sure, why not?
I'm curious, Irene. What was the time frame that it went from 9 to 70?
And what is the stock? I really want to know how all this works, but I'm scared because I will probably get addicted.
You do?
Actually.
Yeah.
You're playing.
It's I wake up in the mornings at around 6:30, and I begin to read the financial landscape. I go to Wall Street Journal and some of the financial magazines just to get an idea what's out there. And they have something called futures. So I look at the futures, and they give me an indication how the day is going to be. A future, they're betting. These are the options. People, they're giving you an indication that you're going to have a good day, you're going to have a bad day. So I look at that information. So then I prepare whatever money I'm going to invest in that day. That's the way I approach it. One thing that Robinhood helps you on, it tells you how much a company's down for the day or the week, whatever. So I look for anything that's down below 5%. They have a good year, but they're down for the week or down for the day. Those are easy decisions, because if they're down 5%, guess what? They're going to go up 5%. And then that's how I am able to do what I do, because if they're having a great year, they're profitable, they have gone up, and all indications what I read in the last 2 hours are good. So I'll invest. But a lot of times they'll say something about a company, so you flag that company. I don't want to do anything with that company. It's being flagged. But anyway, that's what I do. So I read for an hour and a half, 2 hours before I start doing anything.
I'm kind of superstitious about my trading, basically because it just seemed like anything that I wanted to buy, it's going to go down. It's going to go down that day 5%. So what I do now, okay, I'm interested. I'll bite with a very, very small amount, and then I wait for it to go down, and then I buy.
Yeah,
it just seems to work out that way. But
I cruised the other day because of my silly rules, right? So I sold something at 5%, and the darn thing went up 15% more. And I would have done extremely well that day in that particular transaction if I would have stayed. So you have to remember that that my bets are in the range of $2,000 to $3,000 bets, and so with that amount of money, if I would have stayed in one day, okay, I would have made $1,000 in a $2,000 bet. That's crazy. That is insane. But if I would have stayed, I didn't stay. because I didn't know where it was going to go. Because just as quickly as this thing goes up, it can go down. So I have those silly rules and I follow them.
No, you got to make a business decision and no regrets.
Yeah.
Irene says cryptocurrency is volatile. Yes, it is. I made some money, but I get my money out quick. That's the way to do it.
Yeah, I don't do the currencies. I think it's interesting what Bitcoin and all this kind of stuff is. They call it mining. I mean, they go out there and they mine. They're solving problems, and you solve the problem, you get a coin, right? I mean, is that the way you understand it, Cruz?
Well, the coin is so expensive that they are trading shiitake.
Yeah, yeah, but the concept of how you got the coin is called mining. They solve data mining. They solve equations, and when you solve that particular situation, they give you a coin. There's nothing there. There's nothing there. It's just, I don't know. I mean, this is some kind of a fantasy world that I don't follow.
I'm going to have to agree that cryptocurrency is it's fiat money, really, when you think about it, with no assets. At least real fiat money has assets. The country has GDP. The country has assets of oil, gas, whatever actual physical thing that you can actually produce. At least they have that.
Yeah.
Cryptocurrency has absolutely nothing back. Now, the blockchain is valid. The blockchain is good. I see a future for blockchain, but the coin as a vehicle is, to me, I don't understand why it's such a draw, other than for traders and speculators.
Yeah. So I'm glad it seems like some people do well, and it's great. I'm not going to play the cryptocurrency at all.
I got 25 bucks in it just to play, just to see what it does. Irene says it's going to 70. I'm still talking about AMC. Yep. There, that is a volatile stock for sure.
Yeah.
Another app. Yep.
Yeah, I think what all these platforms have done, it has really changed how the market behaves, because nowadays you have individuals like me, you, and the individuals listening to us, that we change the behavior of the stock market, and all these people that used to control the market, they're not exactly so happy that we're doing this, because now we play with this stuff, and we have our stocks that we like, and we buy them and say, what are you doing? I was doing something with a stock. Now you come in and interfere with what I'm doing. So initially when you said that they were protecting the hedge fund, because we're interfering in what they're doing.
Basically, what my understanding is that Robinhood couldn't cover the collateral. You've got several layers of entities, and there is a third party. That's actually a good contrast. The blockchain or Bitcoin and also other coins, it's a distributed transaction, and stocks is a centralized. There is a third party that you have to go through. That third party in the US is the DTC, the Deposit Transaction Corp, I believe it's. But when somebody buys a stock on Robinhood, it goes through the DTC to settle to whatever other platform or buyer is processing that transaction. And the standard collateral is 2 to 3%. It's like your bank that does fractional banking. The bank, you give $10, $1,000 to your bank for a deposit. The bank can turn around and lend $20,000 on those $1,000 that you deposited. And basically that's what's happening also in the stock market. You got the middleman and the hedge funds going through the middleman. Actually, the hedge funds have a direct channel to DTC as opposed to going through a retail chain or the retail path.
Yeah, so people in Robinhood, they, depending on how much money they have, they get a margin call. You know, they can operate on a margin. So you can have probably 10% of what you have. Let's assume you have 50,000. You might have $5,000 that you can use on margin, and they're charging you probably, I don't know, 2.5, maybe 5%. So in a year, okay, in a yearly basis. So if you're doing something smart with that money, if you're doing better than 1% a day, then I don't care about the 5% in a year. But imagine that you're Robinhood and you get all this money, and now you're working with, because they're rotating all this money all the time. You know, whenever I sell a stock in Robinhood, you don't get the money right away. They have to settle.
It's 2 days.
It takes 2 or 3 days before you can get the money. So they're rotating all this money, and then they allow people to play on the margin, and they're collecting whatever percentage it is. So it's to me, these things are extremely smart people that set up all these platforms. And so if you are a conservative person, if you understand it, obviously you should do well. You know, don't speculate, don't be too out of the ordinary, and you should do well. Because I read the stories about some of the people that did not do well, and I read the story about the individual that committed suicide, and I feel for them. But you need to understand this stuff before you get involved with it.
Claudia says, good evening, gentlemen. I'm curious if Mr. Reyna looked up the Gathering Park in Tulsa.
You know, Claudia, all day, I woke up today at 7, and I just got into the house. I've been involved with the my little campaign. I've been out putting signs all over the city. So so I will, if you send me a text message, I will tell you what I read about it. I'm very serious. I will look into it because I want to learn more about it.
Okay, Elizabeth says, I don't waste my time playing stock. I let it ride on moderate risk, sit back and allow the stocks to work for me. Not working the stocks. Keep it in there for a long period of time, 5 years plus. You can make 27,000 one month, lose 10,000 the next, gain, etc. In all, 20,000 was made in 3 months. Buy stocks that are risky, moderate, and low, and let them balance themselves out. I made 20,000 last month, and all I did was scratch my butt. I could lose 10,000 next month. But
true.
That's true.
It's true. It's very true. So that's why I'm saying that my situation with Robinhood is money that I would normally have in my checking account, and because I was working at SDC, I never had a lot of time to pay attention to the day-to-day activities. So I'm not ashamed to say that now that I have more time, you know, instead of making, because like I said, I have the other investments, they're in for the long haul. Yeah, obviously I don't touch them. I don't care where they are. They go up and down. At the end of the year, they do fantastic. But the stuff that I had at the bank, it wasn't doing anything. So I took it out, and I'm doing right now 17%. You know, 17% is a lot better than 0. But that's because I'm very conservative. I could be a little bit crazy and do better, but I'm not. So yes, yeah, I agree with you. I think when you look at the history of the stock market, I don't care, open a chart, you will see it's always going up. Always. The history of the stock market, the main thing here is going to be, if it goes down, don't sell. Wait, it will go up. It will go up. But obviously, to be involved in the stock market, you need to, that money that you have there is not money that you need on a day-to-day basis.
I am getting a little nervous though. I started to sell off before the election because of the unknown, what was going to happen. And then I noticed that there was starting to build a Biden bubble. That Biden bubble continues today. Um, I'm very nervous about it because the very definition of a bubble is that it will burst. And there's plenty of indicators that there is you've got the Green New Deal that they want. You got all this money flowing around with stimulus. You got the monies that they want for all the cities. You got the money for infrastructure. There's going to be a lot of funds, a lot of money out there. And yes, it'll build a bubble, but I'm damn nervous about it. And I'm actually looking closer and closer now to see if there's any indicators that it's going to tell me, hey, time to get out.
You know, what I'm reading, Cruz, is that we have not a meltdown, but a melt up. So if the Dow right now is what, 30,000, I believe, 31,000 perhaps. I mean, some of the stuff that I'm reading is going to go way beyond 40,000. So, but you're right. So I mean, here you have two situations. You have monetary policy at work. The Federal Reserve is keeping things at 0% interest. And then you have all this fiscal activity from the side of the government that's pumping all this money into the system. So when you have all this money that's going to be circulating, and then you inject, you know, the few $1 trillion that they want to do for the infrastructure, you can start to imagine, you know, what's going to happen when people start building bridges and roads and buying new tractors and new Caterpillars, and it's going to be wild. So when do you get concerned? You know, I think you get concerned when it goes beyond 40,000. You know, it's going to go. The stuff that I'm reading, and I don't read loony stuff. I read conservative people, and it's going to go up. So if you're like the individual that was talking about, she invests for the long haul, stay there. It's going to do great. It should do great, because I don't see this thing slowing down. And I think when you say the Biden bubble, the bubble has been there, you know, ever since 2008. You know, it's been going up and up and up. Sure, it had a couple of corrections, but it continues to go up. So I don't think any president controls this mechanism that much.
Well, remember that in 2008, that's more or less around the QE1, QE2, when Obama.
So you did have you were breaking up, Cruz. I could not hear you.
Yeah, you had a lot of QE1, QE2, QE3 during that time, which actually again is mirroring the cash flow, not cash flow, but the velocity of cash.
Yeah. So if for the people that are listening, QE, quantitative easing, as they call it, is basically the Federal Reserve going out to the banks and buying mortgages and whatnot. And so they buy the mortgages and give the banks more money so they can loan more money to people that want to buy homes. And when you have the interest rates at the level they are, you can see the building that's taking place here in the valley. You can see so much construction. Now imagine that they wipe out the student loan. You know, you have over $1 trillion that they want to wipe out. Imagine all those people that have student loans of 60 to 80,000 that cannot buy a home. Now they don't have that debt. Now they can buy a home. Imagine what will happen. You know, and at this point, $1 trillion is nothing compared to what the national debt is. You know, you're looking at a national debt of $23 trillion. It's crazy. You know, it's absolutely crazy where it is. But you say, I want to put another $1 trillion. So, okay, fine, put another $1 trillion. You know, but you know, go ahead.
I totally disagree on forgiving student loans.
Oh yeah, I mean,
especially at this time, because you just mentioned it. Right now, it's a seller's market just about anywhere you go, as far as residential real estate. I mean, take a look at Austin. Good grief. I don't know what the inflation rate is for housing, but in Austin, it's to the moon.
Absolutely. So I mean, here is not a matter of agreeing or not agreeing. I'm just saying what they want to do.
Right,
And
right.
if they do that, all I'm saying is, imagine all the young people that have a $60,000 or $80,000 student loan. Now they don't have it. These people cannot buy a. Imagine for some reason that they decide to wipe that off. What's going to happen now? They're going to go out. They can things. They can buy a house. They can buy cars. Imagine how that is going to trickle throughout the economy. So your point is, should we do it? Well, I mean, obviously, a lot of people say no, and I agree. I mean, but is it going to be good for the economy? Yeah, I mean, there's going to be something. I mean, if we're talking about just under this new stimulus packages coming over that they're proposing, it's going to be what, $1.5 trillion. Well, that's the size of the student loan debt. So what is the difference between that suggestion and the suggestion to wipe out the student loan debt? There's no difference. But there's the difference is that with this situation right now, there's a lot of businesses. They're giving the money to them to keep their employees. Everything obviously is for the macro impact. You know, we want people to remain where they are. We don't want unemployment to go high. There's all kinds of consequences if we allow this thing to go away. Just like what happened in 2008. I mean, you probably remember that. You know, at the end of the Bush administration, they came in, everybody's going bankrupt. So we gave money to the banks, we gave money to the insurance companies to make sure that the system remain afloat. It's very similar.
And by the way, I was there in 1987 Black Monday.
Yeah.
I had fortunately already taken out my profits and was playing with house money. House money means whatever's left after you take out your profits. You're playing with basically free money, but it still hurts. It still hurts losing that much money, especially at that in 1987.
Yeah.
Well, I guess I don't mind telling you, I lost about $180,000 in one day.
Yeah, I like
losses, but still it still hurt.
Yeah, I like Claudia's statement. She said she invested $300 in Bitcoin, and she's to this day is trying to figure out how it works. Well, I guess the question is, did you make any money, Claudia?
Hello, gentlemen. Love having Mr. Reyna on. You betcha.
Thank you.
Elizabeth says, I also think investing into Black and Hispanic businesses should be priority.
Absolutely.
Actually, any small business really would appreciate it, I'm sure.
Absolutely, Elizabeth. And I think that is happening.
Check out the company Seifel or Sifel. They make most money for me. I have a few. I keep my eggs in different baskets. Oh, yeah, you definitely got to diversify.
Absolutely. That's very smart, Elizabeth. Continue to do that.
I personally have about 10 to 20% precious metals, plus the metals ETFs, and then the rest is all paper. And I hate, I'm going to keep the miners because I think that's where a lot of the money's going to flow to if the bubble bursts.
I do buy a lot of gold and silver companies, and they do well. They do well. So I think in the things that I do with my little Robin Hood, I keep it in the on the things that we consume, like Kraft, Procter and Gamble, those kind of things. So I keep it in that route. I go into technology, and then I go into the metals. I go every now and then. I'll buy the petroleum companies when they're really down. I'll buy them, but I mean, there's always. I mean, they're hurting right now, the petroleum company, stock-wise, anyway, because of all the closures and whatnot. The airlines are not flying as many people as they did before. But it's always a good idea to be diversified in what you do.
Elizabeth says a lot of people fear that 2008 will happen in 2021. A lot of talking heads and pundits believe the same thing. And my only I guess downside to that is that you don't know whether these people are talking down because they've shorted some position.
Yeah.
So you
Yeah.
got to watch for that. Which brings up the point of pump and dump. For those that are getting into investing, you got to watch out for those free stock picks. You really shouldn't do that unless you're going to use it against them. Pump and dumps, for those that don't know, is companies that go and extol all the positives of a company and their stock, and those that don't do any kind of research, their homework, they'll go and buy on that, drive the stock, and then those that pumped it up dump it, and those that bought it high lose everything.
Yeah.
So,
Elizabeth, about about the year 2021, the things that I read indicate that 2021 should be a good year. And so, yeah, I mean, there's all kinds of people saying all kinds of things, and you should listen to everybody and make a good decision. But in the research that I do, I'm very optimistic. Once we get beyond 40,000 in the Dow, then I'll start doing maybe some corrections in my thinking. But I think we're gonna be okay for a while.
Stiffel, sorry, I left out a letter. Great finance company. Ozzy says, great content, guys. It's sad that most people will never know any of this. We lack economic education in high school, unfortunately. Totally agree, Ozzy. I think they should bring it back. Kids nowadays, they don't know how to write a check. Actually, they don't know how to write their name. It's all still in block.
Yeah, they took out cursive.
Yeah.
But I think because I have a granddaughter, I think they're bringing it back.
That's what I heard.
Yeah.
Antonio says the absolute best way to invest over the long run is via ETFs that track the S&P, spiders. This passive approach beats vast majority of the pros.
Absolutely. It's a good approach. It's a good approach.
So much pent-up demand that I fully anticipate the market will do well this year, but no question that the market has gotten ahead of itself from a P/E and PEG ratio. Yeah, the example is Tesla.
Yeah.
It's all speculation that their P/E is going to be in that range, but realistically not until 2026, 2027. Right now, it's overvalued, in my opinion. Yeah, I think even Elon said it was overvalued.
Absolutely. I mean, they just had a split a few months ago. The stock is already back at the level when they split. And Tesla is worth more than all the car companies put together. So I was buying Tesla there for a while, and I was doing okay, but then I'm not doing it anymore.
Elizabeth says, I see people getting their college debt getting in different debt via homes, cars, credit cards. Yeah.
Yeah.
Nobody's
absolutely. That's what I was saying, that if we forgive the debt, then that debt is going to go back into the market, whether it's a house, a car, and that will stimulate the economy even more. And it's good for some people. It might not be good for some other people.
I think it's unfair just on the principle of fairness.
Yeah, a lot of people have to pay for their college education, and then here we go. Some people will get it for free. We'll see. We'll see what happens.
There are women's studies which they can't use anywhere, except maybe Burger King.
Yeah, it's important to get a degree with and has some solid skills. Otherwise, you might have a problem finding a job.
Actually, I wouldn't mind some compromise if they actually went through and got their engineering degree and then found a job and they're still struggling to pay. I wouldn't mind some backdoor credits to the company that hired them to actually set up a fund or pay off a percentage.
Mm-hmm.
Make it an incentive, not a freebie. I mean, in society, that's going to get worse.
Yeah, Elizabeth, you're absolutely right. I currently have those stocks in my Robinhood: Coca-Cola, Procter and Gamble, T-Mobile, Johnson and Johnson, and absolutely, we will always need those kind of things. Those are very safe companies, and I wouldn't have any problem saying study them and invest in those companies. Those are America's companies. You know,
Right, right.
Coca-Cola has been around since what, probably 1896, something like that. So they've done very well.
Antonio says it's also important to be diversified from tax perspective. Big fan of Roth Iras. Yep, they have their place.
Mm-hmm.
As a matter of fact, I think that vehicle can actually give you a tax-free income. There's all sorts of little loopholes that you can actually transfer funds into it. That when you take it out, basically it'll be tax-free.
Yeah. No, good point, Antonio.
And he says HSAs, if you're fortunate to qualify for one. Well, if you got a side gig, if you got a small business, you can certainly set one up.
Mm-hmm. Yeah.
There's no such thing as free education. Somebody will end up paying for it. Absolutely. That's where my fairness philosophy comes through.
You know, I used to tell students, for example, Myra, you have a good point. Now, nothing is free, but I think we need to remember that a lot of the institutions that we have in the state are sponsored by the state and the community. You know, all the community colleges in the state of Texas are tax-based. The community pays a tax for that community college. And then for every contact hour that someone's in school, the state will give you reimbursement. So a student never pays the entire cost for going to college. If it's a state institution, I'm not talking about a private school. A private school is they're going to charge you whatever they charge you. So I think you know, the point is that nothing is free because someone is paying for it. Whether it's the tax, mainly a tax situation, you know. So students that go to community college across the state or a state university, you are not paying the complete cost. And then on top of that, a lot of students get federal aid, so they don't pay anything because everything is free. So I guess here is that we have to encourage people to go to school because if you don't have at least a bachelor's degree, you know, the prospects for finding employment will be difficult. And as our economy begins to, it's getting so specialized out there. So we have a very complex economy. And if you want to be making the big dollars, then you have to be involved in the science programs. You have to be involved in the technology programs, the mathematics programs, the engineering programs, because that's where you're going to make money. You know, people that have other degrees, fantastic. You know, I applaud you. Do whatever you think is right. But at the end of the day, I think if you want to be part of this great economy that's going on and will continue to expand, especially here in the Valley. You know, in the Valley, we're still growing. We still have, you know, probably 10% more than the state when it comes to people living below the poverty level. We have 10% more than the state. We have about 10% more people that do not have a high school education compared to the state level. You know, the median income for this area is about 46,000, and the state is about 64,000. So we still have a lot of room to grow, and the only way we're going to grow that situation is by making sure that we have people that have better degrees, so companies can come our way and people get employed.
I need to have statistics. I got to have some numbers to be able to tell you I'm really for or against any kind of forgiveness. For example, I would love to know what percentage of debt, student loan debt, is from students that didn't complete their degree plan?
Yeah.
Are we going to forgive those that didn't make it through for whatever reason? I know we have a lot of that. I have a lot of clients that these vocational schools promised them all sorts of things to go in with all sorts of promises of jobs. They go in, they get a $24,000 loan. They're out in less than 2 years and they're still stuck with a $24,000 loan. I know they're adults. I don't know how you feel about that, but I don't think I want to reward somebody that didn't follow through and complete their degree that has a student loan.
No, I mean there has to be a good process to determine who will be, if that happens at all. We don't know if it's going to happen. It's just like the some of the subsidies that are being given out today. You know, people are getting money even though they're working, and some people say, well, that's good. Other people say that's not good. You know, if you're working, you're getting income. Why should you get that stimulus check, right? So there's all kinds of debate going on because they're saying it's not fair. Those people are still making money. Why are they getting a check? This money was intended for perhaps the people that were not employed and they needed the money to continue. But there is no way right now that you can go and do an analysis in a short period of time and find out who are really the people that need the help. It's very hard. So the best way, just give it to everybody, and they'll spend it.
That's
And
true.
they are.
What's the cap on Roth Iras? I don't really I don't remember. For traditional, it's $7,000 per person. Do you remember offhand?
I don't.
Yeah, I don't remember what it is. I think Biden says up to 10,000 in student loan forgiveness, not the entirety. Yeah, I've heard that too. Actually, I've heard 15,000.
Yeah. Yeah.
Student loan forgiveness, if you're a civil servant or get into jobs that serve the community, that way you incentivize talent to join those fields. That's actually already done with teachers, with police, firefighters, rural nurses and doctors. That's already an actual program that's happening now.
Yeah. Yeah.
The best anti-poverty strategy is we possess as a nation of college degree, is a college degree. What about the argument about when you give everybody a degree, then it's just the same as a high school degree?
Well, I don't know that we want to give people a degree. I think they have to earn it. You know, so no, you know, I think I mean there are college degrees and then there are college degrees. Not every degree is the same. And some of the stuff that I've read, some of the research, they say that in order for us to continue being a great nation, that we need about 30% of the population to have a bachelor's degree. And you're saying, wow, that's so cruel, right? But imagine for a minute that everybody that goes to high school wants to go to college. What's going to happen? We don't have the space for people to go to college. There's no space. If everybody that was a freshman in high school right now graduated from high school and said, I'm going to college, we do not have space. And so that's so they're saying that and the point that this individual is making is true. I mean, not everybody's going to go to college, and not every degree is the same. So if you're going to do well in life, you have to stick to science. You have to stick to technology, engineering, and mathematics. When I was a dean at STC, we had this individual that would say, he was the chair of the mathematics department, and he would say, the more math you know, the more money you're going to make. And that is very true. If you know a lot of mathematics, you're going to do well in life, because more than likely that mathematics is going to lead you to some kind of engineering degree or what have you. And you're going to do well. And my son is an engineer, so I know he does very well.
What happened with STC, speaking of? I remember when they first came to the public and said, we promise we're not going to tax you more than 5 cents. And then like 8 years later, we promise we're not going to tax you more than 10 cents. And they continue to grow. We promise we're just going to be a community 2-year degree school. So then 5 years later, we have bachelors and we're growing to other, and we need more money. What happened there?
Yeah, so think of it this way. Think of it as a community that invests, let's say close to $40 million in taxes, okay? If you invest 40 million and I give you back another 140 million, who's getting the best deal here? Who's getting the best deal? And that's the way you need to look at this.
But
Yes.
it depends on what you put out. I mean,
but all this money, if it wasn't because of STC, and the amount of money that the public puts into STC is about 40 million, the community here in Hidalgo and Starr County. But how much money does STC generate? So we bring in another 140 million from all kinds of resources, federal and state, that is invested in this community. So I do Robinhood. Okay, imagine that I invest 40 million and I get 180 million, 140 million more on top of that. I want to make that investment. So yes, if you're the property owner, you're going to probably complain. But if you're a business owner, you should appreciate what is happening here. You invested 40 million, you got 140 million back. Where's that money going to? It's going straight into the businesses. So it's a good deal. It's a good deal.
As long as you're graduating kids where the need is.
Well, absolutely. I mean, every community college in the state, you cannot have a program unless that program is needed in the community. We don't do any refinery here at SDC because we don't have any refineries, so we don't do any process technology because we don't have any process technology. So every community focuses on the economy that they have. So, I like this point because people make that point, and I answer it the same way. This is a good deal, because if you invest 40 and you get another 140 million on top of that, what's happening now? Think about it. McAllen, the city of McAllen has more college graduates than the rest of the state. Okay, statewide, we have more bachelor's degree in McAllen than anywhere else in the state. How's that? How does that work?
Are you talking per capita or?
I am talking a Census Bureau. If you go to the Census Bureau and look at McAllen, we have over 30% of the people 25 and over that have a college degree. And the state has about 29% at the state level, statewide. Okay. So that's why, McAllen is a little bit more prosperous. Why? You have the college environment, you have the hospitals all over the place, so you have a lot of entities that require college degrees. But you get out of McAllen, and obviously that number goes down. You go into the other cities, I'm not going to mention them, but you go to other cities, it's in the 18% college degree, bachelor's. Okay. So if you make an investment, and we're talking about taxes, and then what people need to see is, what did we get out of it? Well, you got a lot more money out of it. So I'll give you another example. You know where Hoover Dam is, right? In Vegas?
Yeah.
That's a tax situation there. So what happened when you invested in Hoover Dam? What did you get out of it? Well, you got beaches in the desert. There's boating, all kinds of recreational activities in the desert. What else do you have? You have Phoenix. Phoenix is a desert. It would not exist if we had not made that investment in Hoover Dam. Las Vegas is a desert. It would not be there if we had not invested. So when you think about FCC or any other community colleges in the state, that is what's happening. You invest, they bring more money in, and they distribute that money in the economy by buying houses, going to restaurants, and what have you. But if you're a property owner like me, what do I get out of it? Well, nothing. I just pay property tax. I don't have anyone going to SDC. I don't have any children going to Sherryland. What do I get? You know, I pay, I don't know, I think I paid over $10,000 in property tax this year. What do I get out of it? Nothing. I'm a citizen. I gladly pay that tax because I know it's helping the community. So that's my attitude about it.
What are your thoughts on raising the minimum wage to 15?
You know, I think the minimum wage has been where it is for many years. So what happens? Let's assume for 1 minute that we raise the minimum wage to $15. You know, anyone that has taken business classes, they will know that all the expenses are passed on to the consumer. So someone is going to pay for that $15. Prices will go up, you know. So, you know, just like recently we would hear about tariffs. You know, we're going to put a tariff on Chinese goods. Really, what the heck is that all about? A tariff is a tax. You know, the American people tax on stuff that's being imported from someplace else. It's a tax. So in this situation, expenses will go up. Companies have to make a profit. They will pass those expenses to the consumer. And so what does that mean? Things will probably be more expensive.
By the way, we lost the trade war. All the numbers that have recently been published, Trump did not win that war. Fred says, I think a great problem is that we have told kids that don't have a degree that they can't make it. So kids that wouldn't normally go to school drop out and now have no degree in debt. Yeah.
Yeah, and that's that. You know, I feel for those individuals that went to school, they took a debt to go to college, and now they don't have a degree, but they have a lot of debt. So I don't have an answer for those kind of things. I just feel for them. That's all I can say.
No one should get a stimulus check. Yeah, there's some that say they should not. Economic stimulus is bad economics. Open the economy and let people work. But what happens when you do shut it down? Whose responsibility is that?
Yeah. No.
Elizabeth says we have a problem with a lot of colleges, especially community colleges. Local schools don't diversify programs. It is a revolving door for certain professions, and it ends up the community is saturated. I think that their market, whatever courses are there, it's what the market will bear.
Right. No, I think, Elizabeth, that's a good point. You know, all the programs at any community college is what the community needs. You know, and a lot of times, if a program is producing too many graduates, you know, people can slow it down because if it's saturating the market, because you must have to remain in compliance with the state. Anyone that graduates from a community college, we have to show employment. And the numbers are like 90% employment. So if you're graduating people and you have 60% employment, they're going to say, what are you doing? Why are you producing so much when they're not being employed? So you have to scale it back. And so when I was at SDC, we do that all the time. We look at programs, and if something is if something is not being productive, it's a business. The college is a business. At the end of the day, the programs have to be successful. If they're not successful, we close them down.
And if any school is not doing their recruiting properly, the students are not going to succeed. What I've seen from STC and from Pan Am, at least on your STEM, they do have a lot of companies that do come down and recruit. And they actually do hire a lot of Valley kids. They go up, they have to leave the Valley. And most of the time, the kids have to leave the Valley. But then those kids come back and actually start recruiting from the cream of the crop.
Yeah, I mean, this is America. I graduated from a school in California. I'm here, so you can graduate where you want to be, and you can go wherever you want to go. People used to complain to me because we would hire them. So what? Why are you complaining? This is America. People can go work wherever they need to go work. Why are you complaining?
Because this is the Valley, and Valley people
Yeah.
generally don't tend to like to leave the Valley.
Well, I think this is, people can go and work wherever they want to work. And, a lot of times people would want to say, we want to retain the talent here. Fine. If you have the jobs that pay, they will stay. If you don't have the jobs, they're going to go away, and I don't blame them.
Elizabeth says, that's when you start asking what place you're graduated in your class. Without the degrees, my doctor probably graduated in the lower half of his class. Yeah, there's a couple of them that I would agree with. A couple of doctors that I know. Claudia says, well, in my case, I get K. Is that K through 12 or K through first grade for the business? We've got the PPP program forgiven, yet I was told that it's going to affect me because I'm going to have to pay my portion of that money, even though I didn't actually got the money. So now I'm going to pay a lot more taxes. Not fair because it was used for employees. You need to go back to the bank and reread that forgiveness or redo the forgiveness if you've already done the forgiveness. With the second PPP, they relaxed. They actually went back and made it retroactive, relaxed it a little bit more. So you actually do get a lot more forgiven. You actually get to write off the expenses that you used for the money that you used for, whereas under the first PPP, you could not. So now you can actually double dip. You can ask for forgiveness and actually use the expense it out. So you need to go back to your bank, Claudia, and see if maybe you asked for forgiveness a little bit too soon. Fred says the problem is the government guarantees these student loans, which indicates that the colleges that they are can charge anything they want. That's true. There is inflation there. The only way to save education is to get the government out of the loan business and stop giving kids worthless gender studies degrees for $60,000. Yeah, there is some of that going on.
Yeah, I think they have to, when you give out money for education, you have to maybe put some standards on how you want to spend the money, and that's how you encourage certain degrees by saying, hey, I want you to go into this degree. I will give you money. If you go into that particular degree, I'm not going to give you any money.
Actually, Fred has a point here. More college graduates in the poorest area. I did forget that this MTA, Metropolitan MSA, Metropolitan
Statistical area,
is still the poorest. So where's that?
We are.
That you mentioned that it brings in and circulates.
Yeah, the RMSA here. The only thing lower than us is Puerto Rico, and so we are but it goes back to what I was telling you earlier. We have high poverty rates. We have lower graduation rates for the people 25 and over. Whether it's a high school or GED, and then our median income is about maybe $20,000 less compared to the state. So those are the areas that we need to concentrate on, get people better educated so industry can come into our area, and then people will have better jobs, and then things will change. I've been here now since 1996. I'm from Mission, but I was in the Air Force for 20 years, so I was gone. But since I've been back, when I arrived in 1996, the Valley, Hidalgo County, it had an unemployment rate of about close to 24%. and Stark County was way over 40%. So we have done a lot of good work to get the unemployment levels down, and so now they're probably at the same levels at the rest of the state. But the areas where we need to do a better job is attracting industry that pays a little bit better. And until that happens, we're going to have this disparity in the median income.
Fred says, kind of proves the point that most college degrees are worthless. Teach kids how to start businesses, teach economics, teach independence. Those are good goals.
Yep. Yeah.
Elizabeth says, even those graduates get a job, they lower costs to compete with other people in the area. It's a problem. Yeah, it's what the market will bear. This goes for medical assistants, cosmetology, etc. I was going to open a massage business and realized it wasn't worth it. I'd have to compete with $68 an hour instead of 100. Yeah, it's a market will bear.
Yeah.
Hey, Sharky, how you doing? I've got 3 degrees. No one called me to see if I obtain work. Those numbers are jimmied. Yeah, you're gonna have to elaborate a little bit more, Elizabeth. Anyways, we've been here almost an hour and a half. Let's go ahead and start closing it up. Let me kind of bring up the folks up to speed with some of the PPP and EIDL information, and then we'll close it up. PPP, PPP2 actually, that was signed by President Trump before he left, and so it's open. They are having glitches. SBA is having glitches in processing their loan. So if you filed an application and it says processing, it's not the bank's fault, at the majority anyways. It's SBA. They need to get their act together and actually fix their glitches. The lenders have direct access to their portal and they put in the information and they keep getting denied and they can't they finally figured out what was going on. So it's just a matter of days or weeks before the process starts going on. On the EIDL, those that filed last year and got an advance, which is a grant, let's just call it a grant so everybody knows what we're talking about. They got their grant based on the number of employees. And most of your self-employed people, it's just one person, so you only got $1,000, some got $2,000. What Trump signed into law was for the SBA to go back to those applications and actually make those applicants whole, I should say, to the original intent of $10,000. So the process there is SBA will contact you because there is new criteria to meet. But if you do meet those criteria, they will make you whole up to $10,000. So again, that's grant money. You should actually take the time to process whatever information they need. However, beware of scammers. Whenever you do receive an email or a telephone call, never give out personal information like your social security until you're absolutely sure who it is you're talking to. Any emails from the government will have a .gov domain name. So just be careful out there. As far as taxes, February 12th is the date to start processing, and expect those that are single, expect your first refund the last week in February. Those with kids, expect that 1 or 2 weeks later. Any last thoughts, Mario?
Yes, sir.
Any last thoughts?
No. I think I just want to congratulate you on this program. I think for the individuals that are listening, it should be very interesting, perhaps informative, and I think you're going to do well. You're going to continue to draw more people, and hopefully you'll be out there competing with those guys in YouTube somewhere.
Well, I hope that this is educational. It really is, to the folks out there, so they can make sound and wise decisions. Some last thoughts here. Elizabeth says, good night, guys. Good night.
Good night.
Hey, Sharky, will this be show deleted or can we check it out? It'll stay up. Excellent show and great information. Thank you, Claudia. Good to see you.
Thank you.
Good evening. Dora, how are you, Dora? Love the talk, gentlemen. I agree with Mr. Reyna. STC makes the RGV better in that it's usually a springboard for further education, and an educated population in RGV wins. Yep.
Thank you, Dora.
Last thought, the government is 100% useless. It has its place, Fred. Financial literacy is so important, particularly for our community. Any kind of literacy is very important. Thanks for doing this. You bet.
Thank you. Thank you. Good night.
All right. Good night, guys. We'll see you next Saturday.